Hi there, welcome to this special training session titled Thriving in Chaos, Proven Trading Strategies for Uncertain Markets. My name is Anebi Desara. I am a forex trader with over 7 years of experience navigating volatile markets. Today, I'm here to show you how to turn uncertainty into your greatest ally. By the end of this training, you will have actionable tools and strategies to start profiting consistently even when market seems unpredictable. Let's start with this. Have you ever found yourself staring at the screen, confused by the chaos of the market movement? You are not alone. Here is the truth. 75% of traders lose money in volatile markets because they don't know how to manage the unpredictability. Instead of capitalizing on volatility, they let fear and guesswork take over. But what if I told you that these chaotic moments are where the biggest opportunities lie? In today's training, I will show you why uncertain markets are a blessing in disguise and how to use them to your advantage. Now let's dive into the core of this training. My 3-pillar framework for thriving in chaotic and uncertain markets. The first step to thriving is understanding market behavior. This means analyzing trends, patterns, and key indicators. For instance, I use a simple technical tools and price action to spot high probability trades. Let me show you a quick example of how it works. Looking at the pound-dollar chart, you will realize that from September 2024, price have been bearish. You can see right here price has been going down, but something happening interestingly. We saw a break of market structure, more like a change of trend here. You see that happening. How do you make sure you take advantage of this move? What I do most of the time is that I will just plot out that zone, then go to a lower time frame to watch out for a retest of that zone, and that happened exactly at this point. Here we had that retest. You can see price coming here and giving us some signals. That is a bullish hammer there. Even up all the way up here, we had a bullish engulfing candlestick pattern. So let's assume you took that trade from there. If you took that trade from there, you would have been swimming in good profits. Took that trade from there, your stop loss will be slightly below here. That is a good 1:3 risk to reward. Then price even gave us a second opportunity. Right here there was a bullish engulfing candle again when price retested that zone. So you take that trade from there again, stop loss just slightly below here, another sweet trade you have there. So the next question will be, how am I going to join the next one? Now we have seen price already move that big impulsive move to the upside. So what we need to do next is just patiently wait for price to retest where it broke out from here. So you wait for price to maybe come down here, tap that zone, then continue going to the upside. So this is how I analyze the market using simple technical tools. Before I continue, if you are following and learning, comment forex trading. Even the best strategy won't work if you don't protect your capital. Risk management is crucial. Here is my rule. Never risk more than 2% of your account on all trades set up per time. Let me break it down with this example. Here is a tool I use to calculate my position size, so I make sure I don't risk too much on a particular trade. This is the position size calculator from my fxbook.com. You can download the app or you can use your web browser to do this. For example, I want to take a trade. I want to take a trade on Euro USD and my account currency is in dollars. So account size, let's say I have $1,000 in my account, so I input $1,000 there. Let's say I want to risk just 1% of my account. I input it there. So this is where it gets tricky. You need to make sure you input your stop loss in pips. Let's just assume the trade we wanted to take previously on GBP USD. So if I go back to that chart, let's say we wanted to take a trade from here, and let's say the stop loss is 43 pips. I'll come back here and impute 43 pips. Now trade size in lot remains 1, and what you do is hit on calculate. When you hit on calculate, it's going to give you the lot size for you to use on your account. Here it says I should use 0.02 lot size on my $1,000 account. By doing that, I will be risking only 1% of my account, which is just $10. Lastly, execution discipline. This is about sticking to your plan no matter what. Emotional decisions leads to losses. So having a clear system is key. Here is a tip. Create a trading checklist and follow it religiously before entering any trade. In my course, you will discover my personal trading checklist, including my entry and my exit model. Now that you understand the framework, let's talk about how to apply it in real-world scenarios. Uncertain markets often follow patterns, whether it's news-driven spikes or global events. There is always a way to profit if you know what to look for. Let me walk you through a recent volatile market example. You will see how I turn a potentially risky situation into a profitable trade. The key is preparation and confidence in your system. During President Trump's inauguration on the 20th of January 2025, I opened my USD dollar chart. I was tracking this pair. This zone shaded down here acted as support. The inauguration was on Monday. What I did was that when I opened the chart, price was up here. On Sunday night, price was up here, and down here was where we had the support. So what I planned doing was, okay, since the inauguration is during the day, most likely during the morning hours, price is going to pull back a little bit, and I'm going to buy. I patiently waited for price to come tag this zone. Price came tag this zone. First of all, it formed a bullish engulfing candlestick pattern there, and I looked at it. I didn't enter that trade. I was just keeping an eye on it. Then still within that day, price formed a bullish hammer up there. That is when I said, okay, fine, this is a double confirmation for me, a double confirmation candlestick. So I took that trade here. My stop loss was very tight. Since it's a volatile market, I normally use a very tight stop loss, so I placed my stop loss there and I targeted these highs, and within a few hours we got that trade, a sweet 1:3 risk to reward ratio trade. This is how you take advantage of volatile market. Most of the time, the volatility, the news, the events, the geopolitical activity that is happening tends to align with market structure, with the technical structure you see in the charts. If you like this video, kindly subscribe to this channel and tap the like button too. By doing this, you are supporting my channel and it will help the algorithm show this video to more people that need it. By now, you have learned the foundational tools to thrive in chaotic or uncertain markets. But to truly master these strategies, you need hands-on experience and detailed guidance. That is why I created the Masters of Swing Trading. In this course, you will discover and learn the complete details of a proven and winning trading strategy, which I personally use, how to analyze charts and execute trades with precision, advanced techniques to maximize profits even in the most volatile condition. Here is the best part. If you enroll today, you will get access to support group. You also get access to monthly sessions, and also you get access to profitable trading tools. This will help you implement what you learn immediately. Click the button below or the link in the description below to enroll in the course. Uncertain markets are not going away, but with the right strategy, you can thrive no matter what. The only question is, are you ready to take the next step? Enroll in the Masters of Swing Trading today. Let's turn chaos and uncertainty into consistent profits together.